Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Hey everybody, welcome to the Laughing Stock. How's everybody doing today? Happy Tuesday. Sadly, not a great day for me. Had a rough day in the markets, but it is what it is. I didn't sell anything, so it's not like it was like a panic day or anything like that, but some stuff is down, and a lot of the names are kind of the ones that I've been testing out with different things, so I'm kind of averaging down into a lot of these, which may be stupid, but in the long run, whatever, it's probably one of the last testing type things I'm doing here. So after this batch, I'll probably stick to what I've seen work, and hopefully that's what outperforms here going forward. Which I've noticed it's kind of quicker sells is really would be the real big difference here. And I'd probably go more heavily into my positions initially than what I was doing. So we'll see how that works out. Backtracking it, that so far looks like it would be my best bet. So that's probably where I'll go from here. But have the dashboard pulled up. What do you call it? And the surprising thing is, so I'm trying to find some kind of correlation between why most of the stocks in the portfolio today were down, and it just is like a bad day. Like, I don't know. I don't know how else to put it. Like, nothing, there doesn't seem to be any correlation between these. And don't get me wrong, some of the stocks are kind of like I said, a lot of them were bought on just the chart, which I know normally I would not do, but it's me playing around, seeing how much I can rely on the chart or not, because it's really important that, you know, when I'm looking for a buy signal, for instance, I find that if I was going to buy it just on the chart to get into it, do I have to go through my entire research process if I haven't looked at it first, or is it safe enough to take a buy? So far what I've seen is it could be pretty hit or miss. I do think, and on average, you're still okay, but like as soon as possible, you should be digging into that thing if you're going to take a position. And that's the other thing too is with the charts, you kind of have to go in quick. So it's like it's kind of working against yourself, because if you want to look at it, but you also want to make sure that you get in at the price that you're happy with, or when the chart's telling you it's a buy, which for me is usually in negative territory, so it's already bearish compared to everybody else. Most people probably are either selling it at that point, or the narrative is probably waiting to be flipped, essentially. So I'll show you the numbers. Be honest. So this week down about 4%. So it takes the total back down to about 3% so far since I've been tracking, which has been about 2 months, which, like I said, a lot of this has been me testing stuff. Some of these stocks I definitely wouldn't buy. I took a large position in HITI. MAXN I've actually been slowly adding to. We'll see. I know there's share dilution there, so I'm trying to figure out what the true short interest is on that. If it's not the entire float, the short thesis might be gone. Which, if that's the case, I might just back out of that one. It'll hurt. It'll sting a little bit, but I'm setting sells at decent value. So all it would take is one day for it to pop. Which, I mean, it has a lot of volume and it's super cheap. So I mean, and now it's down to. It says a $10 million market cap, but I don't think that's true. When I look online now, because of the 550 million shares, it says 100 million. So it's not really a $10 million market cap, which makes a huge difference. And which is why I'm saying it's weird, because the numbers don't seem to correlate now, because it looks like all the sites are updating. It's one thing that's a pain about this. Like, now I know why people want a Bloomberg terminal, because if that thing updates properly, like as it's supposed to, that would make all the difference, because a lot of this stuff is confusing when you're going from one thing to another, and one thing's telling you there's this share count, this is telling you this, it's telling you this is the short interest. But either way, I still like that on the chart, so I'm just holding that one. SFL had the, of course, was doing great, and I should have just took my gains when I had it, and the next day it plummeted, and that was after a decent up day, and that was because they were offering shares on the market, so diluting that way. ALTO actually had an okay day, up 1.33% there. CTRN had an okay day. GNLX, this is, I gotta stop doing things on my phone. I thought I canceled the buy order and changed the buy order, and I somehow didn't cancel. I just added another buy order, so the position was twice as large as I wanted it to be. Great. And then I was going back and forth, because of course it's down right away after that, so I was like, you know what, I'll just hold it, because it looks like it should bounce back. I'm hoping it does. I don't even know what it's doing in after hours here. Where am I at here? It's probably not. Of course it's not. It's not going to help me out here. It actually did. Yeah, it did actually bounce. So hopefully that sticks. That'd be great. No one sell. No one sell. Not financial advice. But anyways. Oh, come on. Pull back up. So anyways, that one was a stupid mistake, which I'll do plenty of those in my... Whoa, where'd they go? Anyways, let's see. Vertex had a terrible day. What was the news on this? I didn't really get a chance to look in this one. Why are we down 10% today? This is one of the ones I actually liked. Like, it just trades cheap to me. We'll send that over to take a look at, because I want to double check at that one. EXROF, that's a foreign company, so I don't know. If that one doesn't recover, that will start getting trimmed, because that one's been disappointing. Pro Kidney, same thing. Even as a biotech, like I said, the chart looked fine, and I don't know. Maybe I didn't get out on time. I will take blame for my own terrible choices sometimes. Where's the 1 year chart here? What I'm guessing is on this breakout right here, I bought somewhere on this, probably this day here at the bottom. I probably set a buy order. So it just hasn't, but it's only been a few days, or however. It might have actually been on this one. I'm just looking at the MACD when it crossed over, because sometimes that to me will signal a buy. Obviously that's not all I look at, but that's what I'm guessing would have told me to buy on that day. So we'll see. It's not like it's down by much. It's just was hoping that we'd get more of a positive move. You know, it's, you know, sometimes when this MACD crosses over, that's the thing, is it's not, you don't want to just trust on MACD, because sometimes you'll get these big swings here, like this, and same on the way down, and then sometimes they're these little flat ones and they don't really correlate with anything, and the stock price just does this. Now that sometimes that's a bullish signal too, depending on how you look at it, because it probably means that the stock price is going to break out in one direction. So we'll see. And that's kind of why I'm holding some of these, because the other thing too is since I've been playing around with these things, there's probably been 2 or 3 stocks that on the day where it just seems like it's just never-endingly going down. That's the day it comes back, and if I would have just held it there, I actually would have ended up with a great profit. So being that I'm down on some of these, I'm thinking, just play it because of the mean reversion, essentially. So, and don't get me wrong, I know stuff can continue to go down. It's not like it's complicated. But either way, I'm going to hold them for just a little bit, see how it pans out. Keep trimming things probably as I go here, even though I've been averaging down. Like on a day like this, I feel like you have to average down on a day like this. When like all my stuff's down, I mean, you can see the numbers. Down 1%, 4.5, 7, 4.5, 10, 5.5, 1.4. So on the day that stuff's down, and like for instance, like this kooky music thing. This is some. It's kind of a BS company, but sorry if you work there or something. But like obviously look at the fundamentals. Like there's not much here, so this was strictly for the chart. But this was one of the ones that I was thinking of selling because I was kind of holding it, and then it had a big pop, and actually it triggered a buy to sell and sold out most of my position. So I think this was like a 4% or a 5% position at one point, and it ended up selling almost all of it just on that one thing. It didn't quite get rid of it all, but basically, and it wasn't for like much of a profit or anything. It was just over breaking even. But my point being is that some of these names, if you're patient with, you can kind of get out of without getting yourself like too much in the hole. Now some of these like MAXN, if this doesn't work out, that will suck. That's definitely gonna hurt. What else was the other one? And like I said, GNLX, like that's not supposed to be that big of a position, which is just stupid on me. I don't know how I don't know how it didn't cancel, because usually what I do is I cancel an order and then from there re-enter the order. So I don't know what I did, but somehow I didn't cancel the initial order, so I put in for 2 orders. So just me being dumb. And then yeah, but I think that's all right now. Looked like there was some decent stuff on the daily movers. I think I actually have my daily movers correct, where the market caps aren't going to be like super low. I think I said it at 30 million, because like under 30 is where it starts to, for me, that starts to put some hair on it. But some of the names, when they're around that too, they can they can take off. And don't get me wrong, I'm saying that, and I have what's in the portfolio. I guess it's just MAXN right now, which, like I said, also it's not really 10. Like if you go to Yahoo here, I think Yahoo had it updated. Yeah, they have it at 98. And they have, if you go under the statistics here, they have the shares outstanding at 550, which then they're saying the float's 40 million. But this is where I'm confused. And now it says percent held by insiders, percent held by institutions. And then it says share short was 25 million. So I don't know, have they been buying up all these shares as they released the 500 million? Like when was the 500 million released? But MAXN's earnings are, I think they're August 2nd. So I'll probably just hold through that for better or for worse. And if it doesn't work out, like I said, not the end of the world. But if it does work out, I mean, the stock price doesn't have to appreciate much for this to be a massive gain. Especially now, because I've averaged down here at 18 cents like a bunch of times. Not quite 18, it's 18 something, but still. I think my cost basis now is at like 20 cents or something, really low. So, we'll see. That one, I have slowly built that up into a bigger position now. But still, I'm probably down, I don't know. What's like maybe 21 cents? Maybe that's my average. So whatever 3 cents is, 21. I mean, it's more than I wanted to be down, but whatever. It's not a big deal. But there is the dilution now, so that does change, how you have to look at it. Which is why I want to know what the true short interest is. And like for instance, when I go to short interest, I don't think they have it updated properly, which is kind of annoying because that's like the whole point of it. Like this, of course, this stupid thing won't work. There we go. So MAXN here. So they still have it as 82%, but current short interest in the float, they had it 31 million. So, you know, this is what initially got me interested. Now, if this is wrong, this is also my bad. Number one, you shouldn't go in on something just because of a short squeeze, but NASCAR and I got talking, if you were ever in a stream with him, and this was one of the ones he threw me, and I thought it was interesting just because I'm like, wow, that, at the time the short interest was like 73 or 4 or something like that, and I thought that was high. And now then I saw it go to 82, so then I started adding. Probably should have done a little bit more research into that before I got crazy. But either way, like I said, rough day for the portfolio, but you never know. I mean, sometimes these things swing so much. There's been days I'm down more than this, to be honest, and within 2 days I'm up almost the same amount. So it's part of the way of when you're swing trading some of these names too. They're so volatile. You know, they can be up and down 10% both ways within a week. You know, your job is to know when to make those calls. You know, and then like I said, the whole fundamental background comes in basically that. Now I know I'm playing around with some of these companies, but in general, the ones I really like, the ones I really want to go heavy in, such something like ALTO, for instance. You know, they have the numbers. They have the numbers to back it. And also too, you know, we're coming into earnings now, so I sold out of VNDA. It was starting to pull back, and I was still up on it, so I decided let's just cut it before. And it was a good choice. I think it was still down today. But they're coming up to earnings, and to be honest, number one, I don't have any like conviction in this company. It's a pharmaceutical company, so like who knows? But maybe the earnings will come out and this thing will skyrocket, and then maybe I'll have to pay attention a little bit more. I don't know if there's a way, looking in hindsight, I'd be able to say I could have predicted that or not. But it's fine. I mean, but we'll see. I mean, so far they've beaten every time. But the what is this? This is almost a year's worth. So, I mean, you know, they have beaten, and the stock price has appreciated because of all these beats. So, you know, I mean, and to be honest, a pharmaceutical company, this does have earnings. It has revenue and earnings. Even though the revenues are down, it has earnings. You know, and analysts around it are still somewhat bullish. And I know this is just Yahoo's bullshit page, but whatever. Whoops, I'm going to go back here. So, we'll see. I'll because VNDA, I think it's tomorrow, is their earnings. So that's the other thing too, is this is my first earnings season I'm really going through with this style of more like a swing trade. So it will be interesting to see how dangerous it is to hold these through earnings, because that's typically how Wall Street works. Wall Street, you know, from what I understand, it's most of the guys are doing, you know, 80% of their moves during earnings. Like they're buying and selling literally just on earnings. I mean, that's like as much as their extent of their knowledge to go. Everything's like kind of indexed, and then, you know, changes are, and then trying to predict it, like just trying to guess how the business is doing, and then, you know, sell going in or buy going into the next earnings. Which, whatever, if it works for you. But, you know, I'm not able to like keep tabs on a company like that, or most companies for that matter. Not the ones I'm looking at. So we can go into the dash here. So like I said, these are, somehow I'm on daily losers. I thought I was on daily movers. Here we go. All right, so just looking through real quick. I saw HSII had a huge day. In one of my portfolios, I've been buying HSI, but I did not capture this. I think I captured this move here, and I think most of this move here. And I mean, I guess, yeah, I could have held it the entire time, but that portfolio has actually been doing really well. I swear, it's like the ones I'm not really focused on, those ones seem to do well. Sure, whatever that tells you about me. But either way, just looking through to see if there's anything that stands out, so we can go through. Ranger Energy. I know Ranger Dayne is my name, so it's kind of hard not to have to look at this one. It's up 14% too. Check that box. What's this chart look like? It's probably a little high for me right here. yeah, it's kind of hard to buy on conviction on that move. But I will say, what I'm going to start doing is making a very specific list of things where, you know, there's certain signals I look for when I'm looking at charts and stuff. When a company makes that often enough, I might as well start adding that to a list, because if it performs or reacts how I expect it to or want it to, it's good to have a list of those companies, just because if that's must be similar investors or people looking at the same thing I am, or something that's causing these things to kind of correlate. And I'm not talking, you know, obviously there's narrative and fundamentals involved, and I'm not going too crazy into that, but you know, they do have cash flow, they do have earnings, they are below book, and remember my metrics are backwards, so these are yields. But we'll take a look at them. Who else is worth looking at here? Saw Kyle had a big day. I was in Kyle, and I think it was just on this move here recently. And I took like a 10% gain or whatever it was from somewhere in here. So which, you know, I was happy with, and then I think it was like 2 days later I saw this huge drop back down, and it probably actually signaled another buy, but it's tough. It's so tough sometimes on those huge drawbacks or drawdowns. But I don't know. Maybe this is bullish because it, you know, it dropped so much, but at the end of the day, you know, that's just an overreaction and selling, and it pops back up to 35, which is kind of where I got out anyways. And this is the other thing too, on like some of those days too, like if it's a company you're really following and like you like the narrative right there, you think, you know, whatever you like about it, you know, you could set like a buy, you know, 10% below where I'd be happy to want it to go up to, or where I thought it was going to get to. And if it happens to trigger like on a day like this where, you know, it starts at 36 and that day I just set it at 33, you know, if it tips it and you take the position, great, you know, and if not, you know, it's no love lost. So let's look at the losers. It's probably my portfolios in here. Man, you see some of these names down that much makes you feel a little better. Core was down. And then the other thing too, in terms of swing trading, you know, it looks like going forward, there's really two ways I can find that you would do it successfully, at least in terms of time frame. So I'm thinking either keeping it to, you know, probably to like a few days to a weekish, or going the opposite way and holding it potentially for probably more like a month to 2 months, kind of in there. The idea would be that you're looking for different things, obviously. The real short-term one, it would be, you know, there's no negative catalyst, obviously, that I could see right away. And you'd be kind of just taking those small gains, base hits, essentially, constant base hits. And then the other way would be that everything's kind of turning around. These are at real lows, stuff like that, but fundamentally it's not going bankrupt. And, you know, those are ones that you're going to hold for, you know, you're not going to catch probably the very bottom on those, or if you do, maybe start a position there and then add to it even on the way up. But, you know, then you're looking at, you know, over the course of a few months, you know, 200-300% gain. And sometimes I'm looking at the charts; those almost seem easier to kind of predict, just because you can zoom out to the weekly chart and whatnot. And like, I don't know, sometimes I feel like when I'm looking at a weekly chart versus like the daily chart, like sometimes that's easier. It's like, you know, Kyle here, for instance, like, you know, you can see where like RSI gets oversold, and you know, some of these names too, as MACD tends to turn around here on volume spikes, that kind of thing. After a volume spike, that's where you can watch some of these kind of take off. And then the other thing too is if we switch over to like a 3-year weekly one. Sorry, I hope the stream's doing okay, because I feel like this has been like so laggy. Either that or this website's just bugging out. There it goes. Okay, so you know, this is that area that we were just looking at, because we're only looking really at like a year here. All right, yeah, I think that's a full year that it was looking at. So back somewhere in here. So anyways, so if you're looking at the weekly chart here too, same idea. As RSI and the MACD start to turn around here, and you can see it starts to pull up here. You know, you get the chance where you can see something for a few weeks continue to just ride up. So the idea would be, as opposed to taking base hits, you know, you're waiting for kind of everything to hit kind of a bottom of some sort, and then you're watching for the turnaround. And when all of a sudden it does signal the turnaround, you're going to ride that up for a few weeks until it finally plateaus out. And there's ways you can judge that, you know, as MACD turns around, as RSI turns around, that would be areas to possibly trim and whatnot like that. So, but that way you're catching, you know, if this went from 20 to 30 some dollars, and, you know, let's say you sell, I don't know, half your position on here as everything starts to turn here, you know, and I'm not saying it can't happen earlier than that, but as it really starts to turn in here, trim your position. And then if you held the other bit for another, you know, 8, now you got something that's almost doubled, you know, for a part of your position. Now, granted, that's a much longer hold, so we're talking November to March, but let's say it's like 150% return, and you got December, January, February, March, April, 5 months at 150%. So that's like 30% a month, so it's like 1% a day. So it's kind of the same thing I'm looking for anyways, you know what I mean? Like, because if I'm getting 1% a day, that's 5% a week, which is the goal. So and maybe both will work out. Maybe I'll look for both things, you know. I'll go through and look at the weekly charts, and if I see something turn around on the weekly, then I'll treat that more as a longer hold, especially if I like the fundamentals. You know, or like, you know, like there's a growth story there, something to make you like have more conviction in holding it for that time period. And then on the other ones where it's, you know, maybe I didn't get like a ton of time in, maybe I'll take the position, and if it's up a few percent, I'll just trim it there. And you know, and then I can always go back. You know, like for instance on this one, as it starts to break out here, yeah, you don't have as much conviction in buying in here, but if you did buy in here and this just kind of continues to keep going up, you know, until something breaks, and if you're wrong once in a while, who cares? I mean, it's not the end of the world, but either way, technically it's the same difference. I mean, the one thing I thought about with the base hits essentially is if you're buying and selling a little bit more often, every time I'm putting that amount back into a stock, it's a little bit more because you continue to compound your capital faster. So we'll see. And like Kyle here, like, so for instance, like this is what it would be. Now this is a weekly chart, obviously, and you know, I would have wanted to buy last week. So somewhere on this week here, I would have wanted to buy. So we would have already gotten a decent gain just in a week. But if you were to buy here, what does this look like on a daily now? See, like you can see it start to ramp up on dailies. Here, and don't get me wrong, this can break right down, so it's not like you can just look at this and be like, yep, it's going up, it's going to be good. Like this could, you know, like this day, someone bought on this day, I'm sure, and then had this happen to them and probably sold at 33. So you know, it's just is what it is. But you can do a few things to try and hedge those bets, at least in my mind. but in part of the conviction is, you know, if you're able to get in on the lower spot here, when there is days that pull back, they don't scare you out. You know, you have the conviction to hold, essentially. Which, like I said, because I've seen people post this all the time. They're like, how do I have the conviction to hold through like a big drop? Zoom out. Zoom out. Because if you see there's a big drop, but you see this candlestick here, like, what did it matter? You know, it meant nothing in the grand scheme of things that pulled back. This 33, look, like, you know, this line there, who cares? It's all right. Bounce right back. And bullish as anything. So, not to get too into technicals, because the whole point of this is going through and looking for fundamentals here. NISN. This is when I was telling. Speaking of nice looking charts here. There's another one NASCAR and I were talking about that I thought was interesting. Look at this. I mean, this is in 2 weeks' time. And this is the thing, and this is kind of why I wanted to play around with the charts, because there's a lot of companies that don't fit the fundamental build necessarily. Now, don't get me wrong. I mean, if you're looking at NISN, I mean, they do have numbers here. Now, I mean, I'd have to go through and figure out how much I can trust everything I see here. But just on these fundamentals, it looks pretty good. And the crazy thing is, you know, these are up to date, which means whatever this was, I mean, we're talking a stock price of 11.51 right now. So that means back at 350, it must have been, these numbers must have been triple what they are almost. You know what I mean? So it's definitely interesting. I'll say that, to say the least. All right, and here's VTNR. I wanted to, because we want to pull up the news. Oh, you know what? I already had that in from my other one, so I don't need that in there. All right, there's those. Those are good. And then we'll go, let's check out the insiders, see what's moving on there. All right. Is there any real big purchases here? GM had a big buy. A little big. I'm not buying General Motors. Scholastic, huh? Wow, look at the drops this thing has. And then it just recovers like almost every time. I mean, it looks like it's in a bit of a bearish trend because now it keeps breaking this floor here. But there is a floor still set here. And once again, it kind of bounced again, which means this could take off. Where's the 1 year chart on this? Yeah, you know what? We'll pull them in. That's interesting to me. Hasn't APPN been doing super well? Yeah, they've had a pretty good run up. They got a pretty large insider buy too. It's part of the reason I want to just look at them. Okay, I think that's good. We'll start with that. And I just gotta update the fundamental page here real quick. Come on, there we go. Enable. All right, well we'll let that update. While that's updating, we can go probably close a few of these. Q, I saw that was one of the insider buyers. Or maybe that was one of the daily movers. I saw Q pop up. It's probably just a daily mover, actually. And I'm waiting for high tide. I'm waiting for high tide to make a move here. I feel like they're not appreciating what the stock price is. I mean, what the company's been working on. Still just updating a little bit. And just because I want to pull a pity real quick, so I want to just get them in here. Oh my gosh, I'm already finishing this beer here. All right, real quick, gonna put a break on this, and just gonna go get a one more beer real quick. Be right back. All right, I'm back. Okay. All right. This is the thing too. Sometimes I'm researching these companies and I don't have like my laptop on me, so I haven't even put them in my database. But what I liked about HITI is, first off, it's a retail-focused cannabis company. Its segments include bricks and mortar and e-commerce. Has Canadian brick and mortar locations, inclusive of the Canadian warehouse, which supports the distribution of accessories and other items to the Canadian stores. Then it also has e-commerce operations, including the company's United States and international subsidiaries. Blah blah blah. Bunch of different brands that it's basically selling everything under, and sells directly through licensed cannabis stores. So it's a newer company, first off, so young, but in terms of balance sheet wise, $30 million in cash. I believe when I looked at this was mostly operating leases. Actually, let's just go to the interactive. Yeah, I don't know why I'm trying to pull it up this way. It's stupid. Lease liabilities, they got 12 million, or yeah, 12. I'm assuming this is millions, or in thousands, so 12 million in actual notes, and then 27. So yeah, they don't really have debt per se, not in the traditional sense. Just put a date on this. Wait, I hit this twice. I think I need to reset this computer. It's like really struggling right now. Or it seems like, I don't know, it just seems laggy to me. Maybe, I don't know. Now the internet says excellent connection, so I don't know. Who knows what's going on? Alright, anyways, fundamentals. Okay. So anyways, working on, increasing everything. Now, so far, negative earnings. EBITDA finally became positive per share. But really, cash flow and simple free cash flow is interesting to me. We're at 47 cents and now 38 cents a share at a net influx of 37 cents. Like I said, finally generating some earnings. Last year was tough, but this year doing better. They did have the acquisition back 2 years ago. So that's kind of where it stands. Revenues are just slowly increasing. They have diluted shareholders kind of steadily, but nothing crazy. And in terms of what they're paying debt wise and stuff, it's not really changing all that much. So other thing that's interesting me is obviously the increase in margins here. Things look to me like they're getting there. Looks like they're getting better. Actual net common overhang is shrinking. We're down to about 50 cents now a share. So, and then Seeking, there was a few different people talk about it. In general, I think most people on here were relatively bullish. Higher margins are now the base case scenario is what this Cafidel research is saying. I mean, these comments aren't really saying. And he does his own discounted cash flow. He's saying the fair estimate at 443. And what was the stock price? So I mean, obviously, at least a double from here is where he's thinking. And that's from June 13th. And he uses a pretty normal discounted cash flow analysis. And then private label initiatives have also strengthened with a small strategic acquisition and regulatory change. High Tide announced the acquisition of the Queen Bud cannabis brand for $1 million on the 15th of March, adding name onto its High Tide private label roster. I believe the company is very well positioned to leverage the brand sales further by growing the customer base with an attractive retail network. Alberta recently allowed private label cannabis sales. The province was responsible for about 19% of Canadian retail sales in March, making the new private label sales potentially notable, especially with High Tide's high market share in the province. So, I don't know, just in terms of the cannabis companies, I really haven't gotten too interested in any of them per se, but I do think this is one that's kind of interested me. Now, obviously, it's gone down since this recommendation here, so obviously we have a ways to go. And then also this Mississauga retail store. You know, they just keep buying up stuff essentially. So obviously, trying to increase revenues that way. So I don't know, just sounds like they're taking on some acquisitions and whatnot. And overall, I think it looks decent. We'll see if the stock price is able to kind of bounce back here. Like I said, I just, the balance sheet is one thing that made it more interesting to me. That's pretty much part of the reason I took the position, because half the time, if the balance sheet looks pretty good, we'll go with that. So what's going on with the chart here? And then so we'll say, I feel like it could get to 3 if it continues to grow. So we'll see if it's able to turn it around or not here. And I think like $1.25 is what I saw. So let's do an SNA. I think, let's say it's a fast grower. Low debt. Good narrative is really more kind of what I'm interested in, and we'll throw it on deck. Just one of the negatives, it's too young, no earnings yet, so obviously that kind of holds it back a little bit. And then the only other thing I don't think I actually got a chance to look at, I just want to see what the ownership was. Because it's Canadian, I don't think there's going to be any, the insiders won't pull up on Open Insider. And it looks like kind of a mix of people own it, but no one really has like too high of a position. JW has them at 14%, but that's or at 14, but that's kind of a small allocation of their actual portfolio in general, so that doesn't really mean much. So no, not really any owners that I can parse out, but and looks like we bounced back kind of what we were down today, so for whatever that means. I mean, I'll take it. Like I said, after today, I'll take whatever I can get. All right, let's move on. So Vertex Energy, I think, I can't remember if I just went over this with Johnny or not, or not that long ago. Okay, so this was one of the things I was trialing on here. So this company definitely struggling in terms of their cash flow. This has been a pretty rough year. They diluted, and debt's creeping up. Their cash is low. So just kind of really a tough year for them. So they're probably going to need someone to come in here, or they're going to have to dilute here. And this is one of the ones I made a mistake on. So with VTNR, I got in like I think on this day here and rode this up, and it didn't quite hit what my sell was. I think it literally missed it by pennies or something like that. So that's one of the things I was thinking about. And at the time, everything was looking bullish. So where it first had this pullback here, I should have just sold it that day and just enjoyed my gain. Now we're back down to 76 cents, and like I said, I'm just kind of bag holding essentially. Because I believe I'm down. I must have purchased on this day up then, actually, because I think it's 76 cents. It was just under for me, as in like it's just down like I think like 1% right now. So that's a stupid thing. Is like I said, I rolled this up, whatever it was like up 20% or something like that. Which, like I said, if I'm taking base hits, I might as well just take it. And I was just getting greedy because I'm like, you know what? I think it could squeak out a little bit higher, and I swear it just missed it. Which what did it look like on the weekly? Yeah, I honestly don't remember what I put in, but the value must have been just over that dollar mark there or whatever, and it just didn't quite hit it. Maybe it was like 105 I put in, or 104 or something like that. It was stupid, whatever I missed, but it is what it is. And now I'm holding it, which is why I said I really got to focus if I'm going to take the strategy on some of these of where it's a much quicker in and out of. Just taking that. It's 20%. You know, just take it. Go on to the next one. And, you know, this is one of those ones, too, that I kind of, you know, I had looked at it and knew it was kind of in rough shape. And, you know, more what I was seeing is similar to some of these periods where you watch it drop and then it bounces back, you know, what signals those kind of things. You know, and if you can see it here on RSI, MACD, in general, volume seems to follow it. If it's on, and this was on weaker volume, it was selling off and then had the huge rise. You know, this is on large volume, it has the sell off and then it rises afterwards. So, there's a few different ways it can happen, essentially. So whatever, it's a lesson learned. So I'm averaging down right now on this one. Hopefully it turns around. We'll see. Like I said, who knows? None of this is financial advice. You know, obviously I'm literally telling you that I'm working on playing around with these things. And the only reason I actually was okay with this one too is because I didn't think there was initially a concern for bankruptcy like right away. Because if I am concerned right away, then I'll back out of it. But other than that, wasn't that concerned. Why sometimes F3 doesn't come in? Being my spreadsheet here, which I don't know why it doesn't update. All the other ones update, and this one for some reason it skips. I can't think of a good reason why it would do that. There's some weird glitches with Excel when you're doing these kind of things. So, which whatever. I mean, that's how long it takes to update it. It's not a big deal. But, all right. So we liked a lot about this one last time I looked. And I think the concern here was that it was cyclically high. So what is going on with this chart here? Which was cyclically wrong because it's doing great. Oh, how am I not in Ranger Energy? What a miss. Johnny's gonna kill me over this one. I'm pretty sure Johnny even was the one who brought it up to me. It looks good too. I mean, that's what is this? Is this 1 year daily? Yeah, it must be. Yeah, okay. And then what am I getting as fair value on this? 14-ish. So still a little room, I think, to run here, based on probably what these numbers are. Safe on everything. They don't hold a ton of cash, but debt's low. Generate a decent amount in earnings, and that's kind of been improving. Now it's down a little bit this year, but cash flow's up, that kind of thing. So it just depends on what they're actually doing with that. Obviously, CapEx was a little more expensive this year. Last year, the past 2 years, they had a gain from CapEx, which you don't see all that often. So, but in general, I mean, margins are decent right now. Start to pay dividends, blah, blah, blah. There's a lot of like little things that seem to be going for it. Revenues were down a little bit this year, or so far, it's trailing 12 months. Yeah, and that's the thing too, is I put this on deck. What I really need to be doing is going through my on deck list, probably daily, which is a pain in the ass because it's probably up to like 300 companies. Either that, or what I need to do is pull an all-nighter and try and go through some of these on decks and just kind of sift through them and make sure I'm getting rid of the ones that I don't think are on deck right now. And to qualify on deck, this means I think there's something about it I like. It's nothing complicated. But this one looks good. This had insider buying too. On June 4th, they're buying a decent amount. I mean, in terms of their ownership, it was a decent move. But even for them, a 2% move, and together, basically, CFO and CEO decide on the same day they're going to do it. That's on 6/4. Which, right here on this sell-off, basically, they come in here and they're like, buy. And, I mean, from there on, that's set a floor. So, just another thing that, like, that's why, like, sometimes I like looking at the chart to see kind of what the general market thinks of these things. Like, for instance, say they buy there and it goes down another, like, $3. Then, like, no one gave a shit. No one cared. But, they came in and they bought there, so people are like, okay, like, that's where they like it, and who knows? I mean, maybe they bought more. I don't know how long it took them to actually file that. Only 2 days. Okay, so it would already be up if they had done more. And a lot of times, a lot of these purchases are at the $9 mark. I mean, this guy's selling an absurd amount, but he has an absurd amount of stock. So, but this looks good. Is it a buy here though on the chart? I don't know. I mean, don't get me wrong, you can keep going up from here. I guess you could ride this up on momentum, but it's tough to say on that big of a day. It seems like an awfully big move in one day for it to keep going up. But I mean, look at last time this happened. Even over here, I mean, it's pulled up and then it rode, and then it took another month, but then it bounced again, all the way up to 14. So I mean, you're talking here from 9 to 14. That's almost a 50% gain, in the course of a month and a half. I'll take that. Pretty good volume here too. What's this doing in after hours? Oof, still going, still running. So I don't know. Who knows where this could go to? Oh, and they topped earnings. Oh, okay. So they nailed earnings too. Good for them. Damn, this was one I should have kept an eye on better. Damn. What time is it here? 8:44, right? So, interesting. Okay. So, Rangers killing it. I don't know what the hell. I just clicked something about hurricanes. Okay. All right, NISN. This is the other one I wanted to pull up. And this is why it's kind of crazy. Like, it's telling me book value for these guys is like $50. And Like, it's telling me they're safe, and like, I don't know. They're telling me they got $4 million in debt with only 4 million shares. You got like $111 million, a market cap of 51 million. Like, what? It doesn't even make any sense. It's like so all over the place. And like, it's a tech company too. Ugh. And like, you know, like if you had that much cash and you're like, you know, they're not, like, these guys apparently are just shitting cash. They're not giving anything back. They're diluting shareholders. And of course they're paying off debt, which is strange. And I think this is why you get these on the chart, because, you know, people just don't know what to do with these. They have no idea what to think about this. You know, if you're going off the numbers, this is probably computers. It's probably a computer doing this. I was like, oh, that should be worth more. Crazy. But I will say, this is the kind of thing that, like, you know, besides going off the chart, I don't know how you play this. And this is one other thing I was thinking, because I don't have time. If I was able to sit here and do this all day, I wouldn't care at all. But since, you know, I'm trying to catch, you know, hours here and there when I can to look at this stuff, I don't want to have too many positions in the portfolio, because it becomes unruly. It becomes too quick. And like I said, I have a couple portfolios, and sometimes I only have minutes to be making decisions on what I'm doing with these things. And if I start getting, you know, 30 stocks in a portfolio like this, and I'm trying to keep track of, you know, why I liked one, you know, which ones were, you know, the fundamental more long hold, which ones are quick sell, and even with the database and stuff here, it's just not as easy to keep track of all these things as, you know, you would hope it would be. You know, and like I said, if I had like 5 hours a day to do it, sure, that's different. But if I got an hour, maybe 2 at most, you just can't keep up like that. Let's see what Seeking's saying here. No one's even talking about it. I don't think there's too much else to say here. I guess just looking at the chart real quick, where was what is this? This is weekly. I want to see what the daily chart shows. Man, and this peaked all the way up to almost $16. Holy smokes. You're talking 1, 2, 3 weeks. It's 100% a week, basically. You're in there. Which is why sometimes I'm like looking at this and I'm like, you know, if you could get 100% a week on some of these, and I'm not saying you have the conviction to actually get all of that, but any of this move. And like, even the days that there's a strong pullback, you know, you don't see the stock necessarily like reflect that heavily. I mean, it would be definitely ballsier to buy in here, but then as soon as this starts to break out here again, I feel like that would become like, that for most people, I'm sure that's bullish enough signal to hop back in there. All right, here. Next on doc is APPN Corporation. It's a software company that automates business processes and operationalizes artificial intelligence with low-code design. The company is engaged in helping organizations build applications and workflows with a low-code automation platform. Its APPN platform is an integrated automation platform that enables organizations to transform the way they work. So blah, blah, blah. It's helping businesses essentially on the IT side, or when they're processing, essentially. Workflow, robotics, making data fabric. I don't even know what that is. Process mining in one fully integrated low-code platform. Oh, here we go. Its patented data fabric architecture delivers a solution enabling organizations to make informed decisions and root processes from a 360-degree view of business operations. Its self-assembly interface layer, or SAL technology, and utilization of low-code design allows its customers to create intuitive user experiences and deploy them across web and mobile devices. It's a lot of jargon. I'd have to see some of their products to really understand what that means. Massive insider buy on this. Which, like, as of now, I mean, the whole company is failing to generate any kind of money. So book value is now negative. Somehow they haven't burnt a ton of cash here. Maybe they're paying with everything with debt, because, I mean, the debt is really skyrocketing now. Now it's kind of getting a little unruly, actually. I mean, don't get me wrong, they have cash left on them, but they're taking on a lot of debt to be able to stay in this negative territory. Like, I feel like if you don't see massive growth here, then, like, these guys are trying to keep the share price up, but... Oh, okay. And this is Abiel Capital Advisors. And they have... What? So they purchased a shitload of this around $40 in early 2023. And then sold that all for a pretty big loss. Almost all of it. And now they're buying again. And like, how are these numbers all backwards? Like, how do you own 19 million shares here, but then 14 million shares here? Like, what is this saying? Am I the only one that thinks this? Am I missing something? Anyone else think this looks weird to me? Or to you? I don't know. Like, these numbers are, it's like backwards or something. I don't know. And the actual filing dates are in order. I don't know how you are buying shares from 19. You go from 18 to 22 to 13 to 6 to 11 to 19 to 14 to 14 to 15 to 15. And you're buying and you're selling. You're actually literally doing what you're not supposed to. You're buying high and selling low. And then buying some, like, in the same price range. I don't know. I don't know what the hell is going on here. So I don't know. That's one thing that's annoying too, is sometimes Open Insider doesn't catch weird things like that, because it's making me think that that's not as credible or as important as I was hoping it would be. Obviously, the stock price has done well since June. And this is just another case. I mean, as simple as it is, I mean, you start to see RSI break 30 here, and you know, it's kind of taken off since then, which is, it's kind of amazing sometimes how stupid that is, and that works that well. I don't know if there's too much else to say. I'll see what's Seeking saying. Gary Alexander. He's just looking at sales, saying that because, you know, revenues of what are revenues doing? Yeah, continuing to grow. So I mean, revenue growth has been good, but that's like it. Which, don't get me wrong, I can see at some point how that translates into actual, earnings and whatnot. But at the same time, too, so far it's done nothing. I mean, it's one of the worst years they've had. I will say, when is this article from? I mean, what is this in June or July, early July? So I mean, he called it right. I mean, he did say buy there, and he reiterated down here that's even cheaper essentially. So he's right on that. So, and once again, you mentioned in the big AI word. Net revenue retention rates near 120%. So I mean that is pretty good for like software retention. You know what I mean? Landing government deals. And all he's saying is just if you compare this to other tech companies, buy an EV for Ford year 24 and 25, that it is cheap here, and he's arguing that it should be at 37 even if you're doing a 4 times, which he said 5 times is typical for software peers. All right. I don't like to just go off I mean, the enterprise value thing is one thing, but like I said also too, that they've been burning so much cash that they're going to have to take on more debt, which they've already done now twice. And I'm not saying they don't have a decent cash position right now, and I didn't even look when that debt's due. So I mean, I get it that the debt might not be due right now, and that's not like an immediate concern. But we're not worried about bankruptcy here. We're worried about what is this company going to do to start performing. And that's great that revenues are increasing at 120%, but even at 120%, it's not doing anything necessarily for the actual earnings. Yeah, so some part of that is a lease, but 248 is the actual debt, which provides a 5-year term loan. 200 million addition up to 100 million of revolving credit. Credit matures on the 27th or November 27th. So plenty of time. So I guess, I mean, there is time. It's just these numbers got to start to improve here. I guess the clean balance sheet here is what matters. I don't necessarily think that's, great valuation, but I guess if that's all you have to go on, that's one thing too, is like a value investor, like sometimes it's like you see someone making their entire like script off of something like sales, and it's like, don't get me wrong, it's not something you can use, but it's just like they don't even have EBITDA. And like EBITDA is already a shit number. So I don't know. It's tech. I guess if other peers trade in the same thing and you want a comparison, honestly, peer-to-peer valuation is probably the safer way to go, because it's apples and oranges, really. But still, I still think it should come down to the actual cash flow, at least cash flow. All right, Scholastic. Publisher and distributor of children's books, operates through the segments of publishing, distribution, education solutions, and then their international division. I'm sure most people, at least in the States, know what Scholastic is. It's a book company. publishers specifically. Haven't really done anything with book value in like 10 years. Took some debt on here. Margins look okay. Revenues are down a little bit, but we've been here before. This looks like a very steady company. Dividend increased actually. 80 cents on 30 bucks. Earnings are down this year. Cash flow, it looks pretty good actually. Just in general, it's good. They have occasionally rough years for cash flow, but other than that, not much in terms of acquisitions. Still have 98 million in cash, 118 in long-term debt. So the debt doesn't really mean anything. They're fine. Buying back shares. Insider buy. And not like a ton, but still, I mean, at 30 bucks. So they're buying this dip. Not gonna lie, I kind of like it. Just because it seems like such like a steady business, and if it's been, I mean, where's a long-term chart here? Oh, this is the one that had the crazy drop. Yeah, like this is crazy to me. This company just bounces back every time. Like, who is selling this every time this happens? Like, this is a crazy looking chart to me. And like, there's kind of cyclical, but I mean, this is like quarterly cyclical though. It does look like it's kind of breaking down a little bit though. Like it looks like this is, in terms of a longer term trend, looks kind of ugly. But I mean, they've been this low before. I mean, they were pretty much this low here. This one, did they just have earnings? Sorry, I'm going to close a bunch of these stupid tabs. They're anticipating, obviously, probably rough earnings ahead. But their earnings date isn't until September. And I mean, the COVID years really drove this into the ground, but besides that, it has just done this its entire life. Bounced from 30 to 40. Now, granted, can do it over the whole course of a year. It's pretty crazy. Even though there's a capitulation or capitulation in the club business, we just don't feel the valuation case is really compelling. Japanese publishers are probably more interesting now as the growth in otaku culture still has a long way to go in the West. Yeah, and it looks like just because Q4, it sounds like that's their big. At the end of the school year, there's some declines. Book clubs being the biggest disappointment, consistent with poor guidance we covered some quarters ago that disappointing markets. However, the bright spots are falling cost of goods and the 9-story acquisition. With a decent pipeline for Q4, they shouldn't have an issue hitting the flat EBITDA guidance. Nevertheless, we don't see any special reason to be interested in them. So they trade a little bit cheap. Once again, just like on their earnings. So nothing narrative wise. This is one of the ugliest I've ever seen in terms of valuation that Seeking Alpha has. They only got a C in profitability. It's a good one in terms of seasonality, though. Just kind of keep an eye on it and see seasonality-wise what it's doing. All right, we got 9 just after 9. I mean, those are the ones that interest me real quick. There's some stuff. So I'm going to go through some of the charts and stuff. But as of now, like I said, the portfolio is kind of it's kind of, I don't want to say booked out, but I mean, I'm kind of just holding on to these ones because I kind of want to see what happens with these before I do anything else. So I'll probably just kind of hang here, and then like I said, earnings are going to start to come up too. I'll probably trim leading into those earnings because if I'm not confident, I'm not going to ride those through earnings. There's no sense to do it. And then what else? Yeah, and hopefully I get some bounces back. If not, it'll make me focus back to really making sure that there's kind of a catalyst or I just think the company is a great company, and that's more what I'm going to stick to. Probably the only other thing I might test is looking at certain metrics and stuff and see how, if a group of companies have like a strong metric per se, like a PEG ratio, for instance, or EV to EBITDA, whatever it may be, go through and just check some charts on that and see how often, when I'm looking for signals, do they hit in that group of companies. So I don't know, always just playing around, trying new things. Because at this point, I feel like the valuation side of things, it makes sense to me. I can tell when something looks cheap, in general. I can say it looks cheap, or it's a little pricey for me. And then going forward to, like, the cheaper it looks, probably the longer I'll probably try and hold it, because I'm going to be looking at a longer term chart and trying to make that a bigger play where you can make a little bit more on it. But I think that's all I got for now, guys. Kind of a shorter stream. Looks like it went about an hour and a half. But like I said, other than my portfolio getting shit on tonight or today, there wasn't too much happening. I mean, there was some names that moved up and down, and some of the stuff we looked at, I was looking at, I thought was actually somewhat interesting. But Ranger, I can't believe I missed that one, Johnny. But whatever. That's the tough part. It's like I said, yeah, you know, it's just like I could screen for all day, every day. I could just sit here screening, looking for stuff, and you know, and then if I could do that, I would be 10 times more successful. I feel like. But all right, guys. Johnny will be on Thursday, I believe, his normal time. So definitely check him out when he's on. Thank you for anybody who's subscribed. We do appreciate it. We know the stream still, even though we're almost at 100 episodes now, which is insane. Which, I mean, episodes, whatever. It's just live streams, and to be honest, it's not like we're not really coming up with content. Like the market hands us stuff to look at. So it's not like it's like a ton of work or anything to do. It just is what it is. But so yeah, that'd be kind of crazy to do a 100th episode. Well, I'll have to, Johnny will have to do something for that one if you're listening. And then maybe from there, and then I'm trying to think. I'm gonna have to probably do the stream on Sunday this week. So just the one that Johnny and I do will be on Sunday most likely. I gotta talk to you actually about that, Johnny, because I haven't mentioned to you yet. But as long as that works out for you, and yeah, other than that, I think that's all I got for now. Like I said, hopefully the rest of the week's a little better for me. Last time this happened, I was way down. The next like 2 days were fantastic. So go figure. That's why I learned not to don't give up on a rough day. You know, it's just random that happened to be a bunch of my stocks on one day that were all rough. Without, in my mind, there's like no correlation necessarily between some of these positions, but whatever, it doesn't matter. All right, everybody, finish this up. All right, everybody, enjoy the rest of your week. Tune in for Thursday with Johnny. We'll be on Sunday. Unless something changes, me and Johnny get to talk, but either way, we'll figure that out. If you find it interesting, please drop us questions, notes, whatever you want to know. We'll try and get back to you. Always happy to respond and talk to people about this stuff. Obviously, it's a passion, or it's at least something we enjoy. All right, I think that about does it, guys. Everyone, have a great night.